What's going on, everyone? My name is Mandeep. Welcome back to another episode. Today, we're going to be talking about a situation that we're seeing in the economy. Are we living in the roaring 20s? There are more regulations coming to the Canadian real estate market. If you are looking to purchase a home, it might be better to buy now instead of the future. You might be able to get more money. A decade of cheap money in the housing market has created a perfect storm and much more. So let's get right into it. The Canadian bank regulators are going to limit the amount of money that is going to be lent to anyone that is looking to get a mortgage. Basically, Canadian mortgage lenders are preparing for new limits to mortgage lending. A mortgage portfolio will soon be limited to 4.5 times the borrower's income. So if you are making $100,000, you will be able to get a loan of $450,000. Honestly, this seems like a pretty good idea. How well will it work? We'll only know when they implement it, but this can prevent people from overbidding on properties. If you know that you're only going to get approved for a loan that is about 5 times what you make in a year, then maybe you won't go for a property that you know you cannot afford. OSFI is eliminating excess leverage, not over leveraged borrowers. Generally speaking, a borrower is considered over leveraged when their loan exceeds 450% of their income. So Canada's banking regulators OSFI to cap mortgages to highly indebted borrowers. Now, there's a possibility that mortgage fraud might go through the roof when they implement this, but we've already seen mortgage fraud going on for the last couple of years anyway. So I don't think that's going to stop. Tricky local regulation and a decade of cheap money in the housing market has created a perfect storm for prices to stay high. Even in a recession situation, they're saying that prices, single family homes, are not going to go down in terms of price that much. They're saying that the commercial market, the commercial real estate market is going to be much more heavily impacted. Unbelievable demand has sort of been the story of the last 5 to 7 years. That has been the case in America and in Canada as well. And basically, they're saying in this article that over the last couple of years, there was a large amount of cheap money available to the buyers, which has completely been taken away. And because there was so much demand and not enough supply, the prices of homes have gone up drastically. The Bank of Canada likely to lead the U.S. in rate cuts. The Bank of Canada likely to lead the U.S. Fed in rate cuts. They're saying that there's a 70% chance of a quarter-point cut at the Bank of Canada's June 5th meeting. The Canadian Central Bank may also need deeper cuts in the current cycle. About a fifth of Canadian mortgage holders are expected to renew their contracts next year, and rate cuts could give them some relief. I read a stat, it was 2025, there's going to be a lot of people renewing their mortgages, but in 2026 is when a large amount of people are going to be renewing their mortgages. I forgot what the stat was. There was like $500 billion worth of mortgages that are going to be renewed. And if the rates are sitting at like 4, 5, 6, 7%, it's going to be really tough for those people to go from the percent that they have right now. Even if they had 3 or 4% right now, they purchased those homes at very low prices. Jumping from 3 or 4% to 6 or 7% is a big deal. And it could impact people very, very negatively. Canada's household debt is highest among G7 countries. This is crazy when you look at stats and graphs like this. Why are we not building more homes? It just doesn't make any sense to me. The Canadian inflation fell to an 8-month low of 2.8%. This article is a little old. It's dated March 26th. But yeah, so I don't actually even believe that the inflation rate is 2.8%. I think that it's sitting at 10 or 15%. They're lying to us. I remember shopping at Walmart, and eggs used to cost $4 for the ones that we were getting, and they were free range. Those same eggs are now $8. They're $7.99. So that's not a 2.8% inflation rate, right? Gas went from like $1.10 or something like that to $1.99, $1.89, depending on where you're living right now. So I don't know how they're getting this 2.8% number. They just have a random basket of goods that they say is CPI, and then they calculate their inflation on how much those goods are going up. Sometimes they eliminate the goods from the basket and they put other goods in there. I don't know how they calculate it, but The moral of the story is that you got to start investing your money. Are we living in the roaring 20s? The author of this article is saying that we are living in a period of the roaring 20s, which is similar to the roaring 20s. This happened back in 1920. So there was a world war, Spanish flu, and the Great Depression. Sorry, a depression, which happened right here. And after that, we saw this massive run up of 500% in the Dow. So they're arguing the case that net worth is at an all-time high, the stock market is at an all-time high, house prices are at all-time highs, and so is economic activity. On top of that, employment rate is sitting at less than 4%, and it has been for the last 2 years. And last but not least, you can also earn 5% on your cash. And what that means is if, let's say, you have $100,000, let's say you just sold your home and you have a whole bunch of money, you can take that, you could go to the bank and you can earn a risk-free rate of 5% without doing anything at all. All you got to do is pay tax on the interest income. So what's amazing to see is that people are eating out more than they ever have before in the history of, I guess, record keeping. $95 billion per year, that's dining out. And then grocery costs have gone up through the roof as well, sitting at $72 billion. So people are also traveling that like crazy as well. So that just means that people have a lot of money. And I think that one of the reasons that people have a lot of money right now is, first of all, during COVID, they gave us checks, right? And on top of that, this business cycle actually started back in 2008. Since 2008, they pumped trillions of dollars into the economy, and all businesses have been thriving. People have had jobs for a long time, and people's equity has gone up through the roof in their homes, right? So homes back in 2008 were like $300,000 in Abbotsford, and now they're sitting at $1.2 million. If you sell your house, you literally made a 4x on your investment. And a lot of that money is now flowing into tourism. People are traveling, people are eating out. And it's going to take a little bit of time for the Federal Reserve to actually take that money out of your savings account. And the reason I'm saying it's gonna take a little bit of time for them to take it out of your savings account is because that is what their goal is. There's multiple ways of dealing with inflation. Inflation is basically an overheated economy when there's too much demand and not enough supply. So let's take a specific example. In Canada, we don't have enough supply of houses. We don't have enough supply of cars. And what ended up happening during COVID times was the price of houses, cars, groceries started going up very quickly, and that's what you call inflation. The two ways of dealing with that situation is you produce more goods, but that's not what they want to do. They don't want businesses thriving. They want to take your money away, so they kill the demand. Instead of increasing supply, they kill the demand. And when they kill the demand, they're taking money out of your bank account. That's what we're seeing. When you raise interest rates, everything gets more expensive. So they take money away from you and you're not able to spend. That's how they kill the demand. Moving on to G20 inflation rates, we are sitting at 2.8%. I don't agree with that number, but that's what they're saying it is. Would not want to live in Argentina. This is why we're seeing a lot of people move to Bitcoin. I heard Kathy Wood talk about this. She was saying that a lot of currencies all around the world are being devalued at a very quick pace. And what we're seeing is people dumping their money into crypto because crypto continues to go up. Crypto, I mean, if you had bought Bitcoin back in the day, you are up thousands of percent. So she's saying that Bitcoin is a great store of value, even though it is very volatile. One of my favorite articles, a lackluster January through May. One chart shows what the stock investors can expect in a crucial election year. So basically what they're saying is this is the fourth year of Joe Biden's term. What can we expect to happen in the stock market? The fourth year of a presidential term is the second strongest year of the stock market, with the S&P 500 historically posted solid median and average returns of 10.7 and 7.5%. And most of those gains are in the second half of the year. Average monthly returns for the S&P 500 during the presidential cycle, year 4 show a lackluster from January through May. So that's what we're in right now. And then June through August is a summer rally. The strongest month of the year tends to be August. And we should see something like this happen right here. So it should be a good year for the stock market. I don't think that we're going to be going into a recession. I posted a video a couple weeks ago where they said, where a executive for a big company said that there's a 15% chance that we go into a recession this year. I don't think it's going to be this year. I think that there is a recession on the horizon somewhere, but not this year. And Charlie Munger once said that you got to find a way to get your hands on 100 grand, even if it means to walk everywhere and you're not able to eat or whatever. The magic number to get rich is 100 grand. He said this back in 1990s. And apparently that number is now 200,000 when you calculate and take into consideration inflation and all that kind of stuff. But I agree with him. You've got to somehow make 100 grand. Now, I can show you how to do that. Go to, I'll post a couple links in the description down below. Click on those links. I teach people how to renovate and flip properties. If you're good at renovating and flipping properties, you could probably make 100 grand in just one flip. And if you're average at it, you can do it in 2 flips, but I guarantee you can do it. It's not hard to do. I've been doing this for a very long time. I love renovating and flipping properties. I like it more than actually building, because when you're building a home or you're building a duplex, you have to get so many permits with City Hall and it just takes a long time. I like a reno flip, a cosmetic reno flip, and I like to time the market. I like to pretty much allow the market to do all the work for me. I do a cosmetic renovation and then I flip it very quickly as well. I don't have to ask for permits. I just got to get Strata's approval. So visualizing the growth of $100, if you had invested $100 from 1970 to 2023, that $100 will be $22,000 if you put it in the S&P 500, corporate bonds, gold, real estate, and cash. I think there's something really important to learn from this graph right here, and that is that you should keep a long time horizon. You win over the long time horizon. If your goal is to purchase a pre-sale Bitcoin or real estate and flip it in the next 2 months, most likely you're going to lose money. You're not going to make money on that because on average, people are just not good traders, right? So if you have a long time horizon, you reduce the risk a lot. Hit the links in the description down below. And I sell a course on how to renovate and flip properties. Make sure you guys like, comment, and subscribe. And see you guys in the next episode.